Thank you for joining the third quarter results conference call. I'm sure most of you would have received the results by now. However, let me briefly take you through the numbers for the quarter and 9 months ended 31st December 2021. During the quarter, our total revenue is down by 3% to 1,272 crores. EBITDA was rupees 269 crores, which is 21% of sales. Profit before tax and profit after tax is 209 and 176 crore respectively. EPS for the quarter is rupees 8.98 per share versus rupees 14.88 per share in the corresponding quarter in the previous year. As I had explained in the previous quarter's call, a comparison with previous year's numbers are not of much relevance, as previous year was an exceptionally strong year on back of certain and other products shortages in USA. However, what we are happy about is that our Q-on-Q performance is now stabilized, and going forward it gives us confidence that worst is behind us and we'll continue to improve from here. During 9 months for the year 22, our total revenue was down by 5% to 3,890 crores. EBITDA was 791 crores, which is 20% of sales. Profit before tax and profit after tax are 616 crores and 510 crores respectively. EPS for the 9-month period is 25.96 per share. This is for 9 months period versus 48 rupees 10 paisa in the corresponding 9 months ended financial year 2021 in the previous year. Coming to the borrowings, our gross borrowing at consolidated level is 615 crores versus 815 crores in September 2021, and the company has 102 crores in cash on hand versus September 2021 numbers was 329 crores. So our net debt equity stands at 0.10. I would now request Pranav to take the presentation forward on the international business.
Thank you, Mr. Baheti. As you know, let me start with the largest market, the U.S. business. So the U.S. business, as you all know, is coming off a high base of last year. Actually, last couple of years have been very good for us, and I think we've had a CAGR of almost 25% over the last 4 or 5 years, where we saw a lot of market-based opportunities. Having said that, I believe that the price erosions are more normalized now, and we can grow with the new launches. We have some new launches coming up, including our first inhalation product, as well as a couple of first-to-file launches in the next 6 months, which should help grow in this market. In addition, Q3 we saw some supply chain disruptions and higher freight costs. I think freight costs will continue to remain in Q4, but hopefully the supply chain disruptions on the US side will become lesser in terms of Q4. As I mentioned in the last couple of quarters, we've been focusing on cost rationalization, and that exercise has also started yielding results. As we move forward, we're hopeful of better performance backed by new products as well as picking up share in existing products. I continue to remain bullish on the US market. Our R&D expense was about 12% of sales, at 154 crores for the quarter. We filed 6 ANDAs, and the cumulative ANDA filings are at 220. We received 4 approvals in the quarter, including 2 tentative. We also launched 6 products during the quarter, and we plan to launch around 5 more in the 4th quarter. FDA inspection of our injectable facility F3 took place, as you know, and we got observations. We have submitted our responses to the FDA. We hope to hear from them. The US generics degrew by 23% to 393 crores for the quarter, and by 34% to 1,100 crores on a 9-month basis. The ex-USA generics grew by 13% to 193 crores for the quarter, and grew by 8% to 587 crores. This was quite heartening considering that this business has come off a high base of last year as well. The API business degrew by 7% to 198 crores for the quarter, and by 3% to 716. As you know, API of course had a high base last year due to the COVID-related azithromycin. With that, now I request Shaunak to take you through the India branded business.
Good afternoon, everyone. For the India branded business or India formulation business for this quarter, we continue to see the momentum that we've been seeing now for the last 2 quarters. And, on the back of a decent market growth numbers, we could deliver good numbers. So on a 10% growth of the market, our sales numbers grew by 17% over the previous year. And this is just on our straight portfolio, per se, without any COVID-related or one-off benefit as a part of the 17%. For the year, for 9 months for this year, India branded business grew by 17% and 30%. Sorry, we grew by 30% on a 9-month basis, and I think the split between the two for the quarter in terms of growth numbers are 12% and acute was 22% for the quarter. The animal health business, which has been performing significantly well for a long time, it continues to maintain that rate of growth, and we grew by 24% in Q3 on a very high base of last year also. And keeping these things in mind, I think we're quite confident going forward that we're on the right point to look at higher growth numbers going forward with our ability to extract better operational efficiencies from all the restructuring we've done. At this point, I'll hand over the floor for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Question is on, the statement made on the, few launches in aeration and complex products in the next 6 months. So if you could give some more color.
Prakash, sure. Whatever's in the public domain, as you've seen, we've got some approvals. I think the inhalation one is formoterol, which is in the public domain. We should launch that maybe end of Q4 or early Q1. The other ones are the FTFs. I think we have vilazodone, which is an interesting launch that should happen in Q1 of FY23.
Okay, and how many of these, these are, some of them are approved and you're expecting some approvals? Would they require some US FDA inspection or they are irrespective?
No, these are from sites already inspected.
So currently from an US FDA side, only the injectable Karkadi plant is under evaluation?
Yeah. So from an FDA perspective, the only one where we haven't got an EIR for is the injectable plant at Karkadi. The injectable plant at Panelav, that has not been offered for inspection as yet. We've just done the filing, so they haven't come for an inspection as yet.
And when do you think in the past we have talked about 100 to 150 plus products in the grade of R&D, and we have seen the filing rate also improving. But from an approval side, what we have seen are mostly the plain vanilla ones. So when do you think, when a series of these complex products can start coming in?
So I think it's tough to say what's going to be a complex and what's not. But injectables, we haven't seen any approvals as yet, right? I think from what we said as a number of filings, if you've seen, we had said we should get roughly file and get approval of about 100 odd products in a 4-year perspective. And I think we must be close to that because we've been filing over 25 products every year. In terms of approvals, also we're getting about 20-25 approvals every year. So that's on track. Some of them were FTFs, which we're seeing approval. Of course, there's more competition in them. And injectables will happen once the facilities are inspected.
Okay. And any timelines on that, sir? I mean, when do you expect the resolution and remediation to finish?
Yeah, so all the responses have been submitted to the FDA. I think we'll wait to hear from them. I think hopefully next couple of months in this quarter we should hear from them, and then we'll get a better idea.
Okay. And lastly, when we heard, the worst is behind us, is the commentary both from the US sales run rate perspective as well as our gross margin and EBITDA margin perspective? And because both are seems very interlinked.
And no, I was saying more from a US erosion perspective. I think on a year-on-year drop. So you see Q on Q, I feel now this is what the new base that we're looking at, about $45-50 million is the base that we should look at. And then slowly as we keep adding products and slowly get market share, that should help.
Would Mr. Baheti want to comment on the margin trajectory?
So this quarter we have 21% EBITDA margin. For the 9 months period, it's about 20%. I think at EBITDA of 20%, we are at this moment we look comfortable.
And would we say that the worst is behind in terms of 20-21% and we come back as inching up?
Yeah, I think it's too tough to say right now. It's too early, Prakash. I think let's just stick to what we believe right now in the near future. We believe 20% is a fair kind of margins for us.
Okay, I have a few more. I'll join back.
Sure. Thank you, Prakash.
Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC Securities. Please go ahead.
Hi, good afternoon, and thank you for the opportunity. My first question is on the US. So you obviously have seen a good sequential recovery and mentioned that the worst is behind us. So can you elaborate a bit, like now the excess inventory in channels which were dragging down price, has it been cleared in your observation, or what has led to the pricing stability seen in third quarter?
Actually, to be honest, I don't know about the channel inventory, and I'm not aware of that. I don't think that's impacted us. What I'm saying is, if you see the last 2 years, we had a very high base. And when you have something, for example, going from a 70-odd million per quarter base, we came down to 50 million. That's the kind of drop that we had. Now coming to 45-50 million, I don't see erosion from this level going to more than a mid to low single-digit kind of erosion. That's what I'm saying. It's not going to be a drastic fall. I believe it's stabilized at these levels. So even if there was erosion, it will be taken care of by either increase in market share or by new launches. That's what I was trying to say.
Okay, so in terms of pricing erosion, it's broadly back to the historical range of mid to low single digit in your observation.
Yeah, I believe so, yeah.
Okay, and have you heard, I'll say, more communication from the FDA in terms of facility inspection in India? Obviously, you mentioned you have offered a finalized facility for inspection, but in general, how has been the communication ongoing with FDA in terms of some of the pending inspections?
Yeah, for our facilities, we haven't heard anything except for the injectable facility. From the FDA, we have not heard anything from them.
Okay. And my last question is on India business. So last 3 quarters or so, good performance. And I understand, barring third quarter, in the previous quarter, we had some tailwinds from COVID-related demand also. So on back of that, how we should look at growth in next fiscal and beyond?
So I think the growth was only, if there was any growth, it was mainly only in Q1, not in Q2 or Q3. So there was no COVID-related tailwinds per se. Going forward, the simplest way I would look at my growth is whatever the market grows at, I should grow at least 5 to 6, minimum 5 to 6 basis points higher than the market IPM growth rate. That's the simplest way I can explain it.
Okay, so say market is growing at 10%, you should be achieving 5 to 6 percentage point ahead of a market.
Yeah, minimum 5 to 6%.
Okay. And what will be key drivers for that kind of big outperformance against the market?
I think it's a mix of couple of things. We've talked about operational efficiencies, and we've done a lot of work in the last 3-4 years in and around that. I think along with that, with the portfolio rejigging that we've done, I think broadly, if you look at my products which are priority, bulk of those products are sitting in a good high growth markets, which should allow me to give a higher than market growth rate.
Okay, that helps. Thank you. I'll get back in the queue.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity. Just again on the domestic formulation side, there's been a significant growth, particularly on the acute side, and that too in cold and cough. So is it more seasonal?
I think it's a couple of factors. There is some amount of season, but I wouldn't say there was a I think it's a lot to do with the base from last year, which was quite low. There was a suppressed base for cough and cold last financial year, which we're seeing it going back to and maybe going a little higher than 1920 levels.
Got it. And even in the anti-diabetic segment, we have seen much sharper growth for Alembic. Anything you would like to call out here?
Yeah, I think the anti-diabetic growth is largely on the back of a couple of good launches we've had in that space, and we expect that momentum to continue for us going forward.
Okay, then that's it. Thank you.
Thank you. The next question is from the line of Bharat Celly from Equirus Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, sir, just wanted to understand on inhalation product which we have referred for. So, now what is stopping us from launching it? I believe there is no patent and when the expiry has already been, for Teva is already over. So, why we have not launched and we are waiting for another 1 quarter to launch it?
Yeah, no, it's a good question. It's a product that we've gone through a CMO, and we're just waiting for the scheduling. And COVID time they've had some disruptions, and we're just waiting for that. Otherwise, we'd like to launch it on day 1. But between the FDA responses to the ANDA, not observations, responses to the ANDA, as well as the constraint from the CMO side, that's what's just delayed us by a couple of months.
Okay. And what is the outlook, competition outlook for this drug? Given that there are multiple companies who are chasing this drug, so do you see any immediate competition, or you see that there will be some practical exclusivity for you to be in this market?
No, there is competition, but there's limited competition. There's not 15 people. There's, I think, if I'm not mistaken, 4 or 5 people or something like that.
Right, but in the first phase, there will be 2 along with you, right?
No, I think there's already 4 or 5 people there in the market.
Oh, okay. And sir, if you would tell your US revenues in dollar terms, it will be helpful for this quarter.
But I'll separately send it across to you.
So it's about 50 million, right?
Okay. And sir, last one, how we have seen azithral, given that that was a product which was gaining a lot of momentum in the past. So has azithral came back to the historical run rate quarterly, or it is still high in the domestic business?
I don't for Q3.
Yes.
Yeah, it's back to what it should be.
Okay. Thanks. That's all from my side. Thank you.
Thank you. The next question is from the line of Ankit Sonkia from Oculus Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, what are our key learnings from this Karkhadi plant experience with US FDA? And have we taken any remediation measures for F2 plant in advance so that we don't face similar situation whenever FDA comes for its inspection? And it's very difficult for us to understand that for a brand new facility, what has been the issues that it's been so long that the US FDA is not satisfied with this facility yet?
So I think it's not just facility. Facility is one aspect of it, but I think it's the practices and the documentation and the processes you have. And I think most of our thing has not been on the hardware, but it's the observations have been on the processes and the practices that we have. And it's a learning curve, to be honest. This injectable has always been tricky. It's always going to be tricky. People who've been in it for years also faced issues on it with our bigger peers. So it's just a matter of a learning curve, and there are learnings, and hopefully, yes, we will apply these learnings to other facilities as well.
Okay, and have we already taken some measures in F2 plant?
Also, some delay has been because of inspection itself got delayed because of the COVID and all that in the past. So not the entire delays. Of course, after sending our response, they came back, and the second time observations were a little more painful to us. So you are right.
Okay, so any measures that we have already taken for F2 plant?
Yeah. So what we've done is we're using, as you know, we're using consultants. Of course, the teams have seen what observations happen in F3. There's a common quality head, so we're trying to replicate those same things and get F2 ready as well.
Thank you. Ankit, just to clarify, this is not our own observations from which we take learnings. We look at all public documents of all observations of any pharma plant across the globe, and we sort of give intense training to our people, taking those as case studies. So this learning is a continuous process.
Okay, thank you.
And as far as F3 is concerned, all from our side, at least we believe, all remedial action has been taken and the response has been filed with the F2. Now we need to hear from them.
Okay, thanks.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. The next question is from the line of Kunal Randeria from Edelweiss. Please go ahead.
Hi, good afternoon, everyone. Perhaps slightly longer term question for you. So as you expand your portfolio, so could you share how many para 4s of FTX would you be sort of working on from your onco and general injectable plant?
I don't have the number again, but I should send it to you. But roughly from the onco side, bulk of the filings on the OSD side will be all para 4s. Because these are the ones today most of the para 4 opportunities are on the onco only, because most of the products getting approved, the new products getting approved in the US on the onco side. So I'll just get Mitanshu or someone to just send that data to you. I don't have it offhand.
Sure. And on the injectable side?
And for the existing side would be lesser because when it used to be, I think at one point it used to be about 24% of our portfolio would be, it used to be high, about 30%. I think with the increase in filings, I'd say about 20% of our portfolio would be about FTF filings, if I'm not mistaken, or pending launches.
Okay. That's
FTF, yeah.
That's helpful. And secondly, on the domestic business, I mean, that's been quite impressive in the last, few quarters. So, while Shaunak did mention that you do expect market-beating growth in the coming quarters, maybe if you can shed some more light on which of the therapies you think, we should expect, strong growth going ahead.
From India business?
Yes, it's on domestic business, domestic branded business.
Yeah, so I think all the segments which we operate in, I think we will pretty much, we're quite aligned. And I think if you want me to go through the list, it's basically, I would say it's cough and cold from the acute side. We have a strong antibiotic macro-like business which should give good growth. I think the GI piece is one where we'll grow. Women's healthcare, we expect great performance going forward. CVD also we're expecting a similar strong performance. These would be the major therapeutic areas. Along with that, we have some of the smaller niche segments where we expect these growth numbers to continue. So which is basically our ophthalmology, dermatology, urology, orthopedics. And of course, I think along with that, though I don't have market growth numbers, but I think our veterinary business is something that we've been really able to ramp up the growth to a very high double digit over a sustained period now. I think we're expecting at least that piece to continue with growth also.
Sure. And just one more, Shaunak. If I compare your last presentation to this one, your, I think, marketing team strength has gone up from around 5,000 to 5,500. So just wondering where this 500 addition that you have made is being made, in which of the therapy areas?
No, so I think this I don't know, there must be some confusion because we've not added 500 people in the last year. So I don't know where this date, but we have
compared from the last quarter. Okay.
I think there must be some issue with the updation of the number last year, but roughly we look at adding, and we will add last year rather we've added in the range of about 150 plus minus people, and I think going forward also we should expect to be in this 150 to 200 range in terms of manpower expansion. Obviously, a bulk of that goes into the larger divisions. So if you ask me specifically, I would say the cough and cold acute side definitely gets a high percentage of it, along with, I think, in the last year, I think we've done some additions in the women's healthcare / gynecology portfolio and a little bit in the CBD space also.
That's helpful. Thank you very much and all the best.
Thank you. The next question is from the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead.
Yeah, hi, good evening, everyone. So first question on the US side. Now this quarter, Alembic has clocked around $50 million, which is $200 million annualized. So can you help me with the number? How many products are there in the market which is contributing to this $200 million annualized sales basis Q3?
Roughly, we have about 101 products in the market.
Okay, so basically, assuming that there's no major concentration left in Q3, so $2 million odd per product. I know there will be some products which will be higher contribution nature, like the inhalation product that you talked about. Some will be lower. But on a blended basis, is this what the run rate should look like over the next?
I wish it was so easy, but typically I think with us and for every company, there's always a 20-80 kind of a rule. I think 20% of your products will give you 80% of the revenue, and we'll be in the same. What has happened for us is the concentration has come down. I think it's the last couple of years, 5-7 products was a much higher concentration. It's become, I would say, top 20%. So in that effect, I'm a little more comfortable, and that's why I said earlier in the call that I'm more comfortable moving forward with these current level of sales.
Okay, got it. And I don't know. If currency difference might be there, but there's some decent growth on a constant currency basis that I can see on a Q&Q basis. Can you split it out? How much of this is new products, and how much of that is, and what kind of a pricing erosion would you have faced on a Q&Q basis? Any ballpark number that you can share?
We don't give a breakup of new products versus old products. It's all blended, and that's why when Damayanti asked earlier, I said that I expect, even in spite of erosion with the new products, it will make up part of it. So we just give a blended kind of number. In my opinion, I think erosion would be in the mid-single digits right now. That's a ballpark guess. Again, I don't have the exact figure because you have to go product-wise, and it's a little tough to calculate.
All right. Okay. And would it be fair to assume that, you talked about certain interesting launches in the next 2-3 quarters, that at least from the US front, this is what the bottom is in terms of gross margin, and things can only improve here on? I know it's a very dynamic situation.
So again, we don't break up the US also by gross margin, but I expect, I think it should continue. At a corporate level, our margins will continue being where they are at about 20-21% odd. And let's see how it goes, because it's also a combination of R&D spend and what percentage of R&D spend, because we expense out everything.
Okay. Now, and specifically, I had a question on the OPEX side as well. If I look at 2Q versus 3Q, your OPEX is down almost 30 odd crore from 700 to 670. Is this are there any one-time savings in this particular quarter? I know R&D is down by some 14-15 crores, but is this the new run rate that the company is working with?
No, actually, it doesn't work that way, because Q2 for all pharma companies who are in domestic business, the domestic promo expenses is the highest, and then it gets down. So actually, you can't be doing a comparison this way. So in branded business, we have been gradually increasing our spend, and in IBU, of course, there has been some cost reduction.
So, can you help me with the cost reduction number, because I think that can give a better sense on how much annualized we are tracking at.
So, I mean, okay, if you look at the 9 months number, I think that's a fair equalization.
Okay. So 9 months of FY22 minus 9 months of FY21 is what the cost reduction has been achieved, and it should be sustainable.
More or less, yeah.
All right. Okay. And one final question.
Also, mind you, this is net of some cost increases, like Pranav mentioned, some freight costs have gone up, not for us, for almost the entire industry. Particularly the international freight costs have gone up very high. So some of these costs have gone up. There will be some employee cost increases because of the normal increments, etc. So these are all net of cost increases.
Okay. And on the R&D side, I mean, I know companies talk about as a percent of sales basis, but can you give some sense as to how should one build the R&D number going forward in 23 and 24 on an absolute basis, not so much on the percent of sales basis?
So I think on absolute basis this year we'll be at what 650 or so 670 odd crores for the year. I think moving forward again I would take a range of about 650 to 700, 650 to 750. That kind of a range is what we should look at for the next year.
Okay. And just one final question. Now, I mean, India growth has been quite good last 2-3 quarters. Any interesting launches that you can highlight that are coming up in India over the next 12-15 months that we should be looking forward to?
Yeah, so we keep launching products. I think from new launch point of view, I think we have a couple of launches we're trying to work on in the gynec women's healthcare space, as well as you're aware that some of the big cardio-diabetes products or more diabetes products have gone off patent and will be going off patent in the next 12 months. So I think largely we expect these two segments to have a bulk of the new launches, or rather the high-value launches, to happen in that space.
Okay, great. Thank you so much.
Thank you. The next question is from the line of Amit Singh from Oculus Capital. Please go ahead.
Yeah, sir, am I audible?
Yeah.
Yeah, sir, just a bookkeeping question. The 2,000 crores CWIP that we have, so what is the split of that between the facilities, and when can we expect it to get capitalized in the books?
So split we have already given some time back. If this keeps changing only to the extent of pre-operative getting added, and as far as the capitalization is concerned, that would be on the day when my first commercial batch is taken out of this facility. So that would be obviously post FDA approval of the facility, and then my getting approval of the products.
Okay, thank you.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, hi. Related question. So, like we have some cost, capitalized, and you also gave margins of 20-21% to be, the new run rate, etc. So, is this baking in the new cost which is currently being capitalized and will start being in the P&L once the products kick in from the newer facilities?
So, because it is like this, there will be 1 or 2 intervening quarters where the revenue will be little low to start with, and we'll start charging of all the cost to P&L. So, but apart from those aberrations, I think once the new facilities also start getting into the revenue more traction, we should be back to this EBITDA numbers.
Okay, and this you expect in the fiscal 23, or when do we expect that to happen?
23 we surely expect, barring any F3 should surely happen, and then hopefully at least one part of F2, that is that oral service. No?
I just missed, it was not clear, sorry. Can you repeat the last 10 seconds?
Yeah, so F3 for sure will see a commercialization in FY23. F2, I believe it's still a way off. I think we're going to wait for the audit by FDA. I think, as I mentioned, the OSD products are a little way off, so I think we're going to wait on that. F4 also, I think we're going to wait because that's just additional capacity, so that will trigger FDA. So I think in FY23, you'll see probably only F3 coming in.
And the cost spread up between 2 and 3 is equal, or it is?
No, F3 is a larger facility.
Okay, so the large part of the cost will start getting in the P&L from, say, maybe Q1, Q2.
Whenever it's commercialized, whenever FDA and we resolve the issues. So.
The F3?
F3, yeah, formulation 3. Yeah.
Okay. Understood. Fair enough. That's all. Thank you so much.
Thank you. The next question is from the line of Jai, an individual investor. Please go ahead.
Yes. Hi. Am I audible?
Yeah.
Yes, sir, you are.
So, please could you explain the new capacities coming up in the next 2 years? In what segments are these capacities coming up? And what is the total addressable market of these segments and the pricing in the segments?
So, multiple questions, Jay, but I think this would consume time of others. I mean, they are quite familiar with our business. We are into the new facilities have been created for injectable, for onco, oral solids, for onco injectable, and a new formulation facility. So this is where these investments have been spent out. And each one of these will need a different explanation. Why don't you get in touch with Mitanshu offline and he'll explain you?
Okay, thank you.
Thanks.
Thank you.
We can wind up the call if there are no more questions.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. R.K. Baheti, Director of Finance and CFO, Alembic Pharmaceuticals, for closing comments. Thank you, and over to you, sir.
Yeah. Thank you, everyone, for being with us in our conference call. And as always, it's always a pleasure interacting with you, and we keep looking forward to engaging with you in coming times. In any case, if somebody has more questions, Ajay and Mitanshu will be happy to respond. So with these comments, I conclude. Thank you once again. Good evening and stay safe.
Thank you very much. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals,